Real Estate Investment Trust, Part 3. Now, in the first video, I've spoken about, or rather given a brief description of what a real estate investment trust is, right? Given some advantages and benefits of owning a real estate investment trust versus owning a property in itself. In the second video, I spoke about the stakeholders or the people that are involved in this said real estate investment trust company, right? And now I'm going to talk about the features of REITs. Okay, so firstly, we talk about gearing or borrowing in terms of a real estate investment trust company, right? The maximum gearing, at least in Singapore, which in turn would mean that the REIT's total amount of borrowing must not exceed 45% of its total assets, right? So what does this mean? This means that imagine if a REIT company were to own $1 billion worth of assets, right? They would not be allowed to borrow above 45% of their entire net worth, right? Of the entire REIT company, or at least the properties that they own in total. Okay? So this is to ensure that they don't over leverage or over borrow and put the investors at risk, right? Because the investors are the one that invest in the REIT company, right? And the REIT company is supposed to do its best interest for the unit holders. Okay? Now, next, we talk about restriction on investments. So the REIT company is only allowed to purchase permissible investment under the CIS. Okay, any real estate or related assets, whether in or outside of Singapore. And at least 75% of these investments must be invested in income producing real estate. Okay, that means it's already producing income, right? And the REIT can undertake development activities of up to 25% of its deposited property based on certain stipulations. Now, next we talk about annual valuations, right? We have the PE ratio, okay, the price to earnings ratio, and the earnings per share of investing. So earnings per share would be like, for every dollar you invest in this real estate company, how much are you getting back or getting out of this dollar for every dollar that you invest in, right? And it is vastly different from property companies in itself, okay? Because property companies actually own every single piece of property inside, right, that company. But whereas a REIT, right, is holding this group of properties in trust for the unit holders. Okay, so that's one of the difference. Okay, and a REIT would have in Singapore, they would have a tax benefit of 90% of taxable income, right? That is a huge tax benefit in terms of when it comes to distributing of these the income that is from the rental from these properties. Okay, so these are some of the benefits of a real estate investment trust and its features of the real estate investment trust. Keep pounding. I'll see you guys in the next video.